talking OPEC, of course, today. The 12-member oil cartel OPEC meeting in Vienna today to mull production cuts to curb the relentless fall in crude prices. A Bloomberg survey shows that analysts are evenly divided on whether OPEC will cut supply to support prices. I'm being joined both by David Lennox of Fat Profits as well as Jonathan Barrett of Ayers Alliance to discuss that. But first up, let's head across to Bloomberg's Ryan Shilkote. He's joining us to tell us really what's being expected from that summit today, Ryan.
If you were banking on the oil countries that most need a high price for oil to cut production to get us there, you might be disappointed. We heard from Saudi Arabia's oil minister, Ali Al-Naimi, fresh off one of his daily speed walks, telling reporters Saudi Arabia, the United States, nobody else needs to cut production because the oil market will effectively sort itself out. Then we heard yesterday from Russia's oil czar, Igor Sechin, suggesting that Russia could even survive oil prices below $60. He'd just come out of a meeting with Mexico, Saudi Arabia, and Venezuela, those four countries failing to reach an agreement on cutting supply. There seems to be a readiness to wait this one out. But OPEC is, of course, an unpredictable group. They beat on Thursday. The production target that they agreed on the last time was 30 million barrels. Perhaps they will keep it there. Perhaps they will tell one another to stick to that target because they are overproducing now. Obviously, something to watch. Ryan Shilkote, Bloomberg in Vienna.
Thanks for that, Ryan. We're also talking about the impact that crude has on India's fiscal math. It contributes a lion's share, over 78% of India's annual import bill. Anu's joining us to tell us what impact is likely going to have with any kind of change in those oil prices, Anu.
Well, we're watching out for the OPEC meet quite closely because since June, crude oil has been in a bear market, 30% off from its highs in June. Has been very good news for the Indian economy as well as for FM Jaitley's mathematics for the fiscal deficit. As you mentioned correctly, that India does import nearly 80% of its oil import needs. In fact, the bill of FY14 was a whopping $150 billion, despite the fact that demand was actually coming down in a slowing economy because prices were so high. On the other side, every $10 drop in crude helps the GDP by about 0.5%, 0.15%. That's initial estimates done by Morgan Stanley. If you look at the fisc impact directly, the $30 drop on crude prices will help Arun Jaitley's mathematics on the fisc by a whopping $30 billion. And that's a big boost coming in. The other part is that rupee has been largely stable through this period. It's depreciated about 3% versus the dollar. So it's been quite stable over this period that the crude prices have been dropping. So we've been able to absorb this crude price drop quite well. But all eyes definitely on OPEC and what happens in Vienna, because historically cuts have meant a spike in crude prices, and that's definitely bad news.
All right, Anu, hold that thought. I'm bringing in David Lennox as well as Jonathan Barrett at this point. Gentlemen, appreciate your time this morning. David, I want to start with you and talk about the headline and the assumption that OPEC will not cut production, but will at least try and ensure that there's no overproduction. It has the 30 million per day target. What will happen to prices then, in your opinion, David? You know, they've already plunged about 30% since June. How much more of a downside are you expecting in the short term?
Well, look, certainly we expect if OPEC come out and suggest that there's going to be no cut in the actual production numbers, then that will put further pressure, we believe, on the oil price, and we will continue to see the bear market that we've seen over the last few months in the oil sector. So really we will be watching very carefully to their wording, but more importantly, we've got to really watch their actions.
Jonathan, you know, the same question to you. What sort of targets are you working with in terms of prices in the short term if there is no cut on output and this, you know, sticking with their previously stated production targets?
Yeah. Look, I think obviously the market's decided to make this a real focus. OPEC have in the past said that they're going to monitor prices, and I still think that's what they will do. I do think that the price action today has continued to be very weak, and you get a sense that if it continues to weaken and we don't get anything, which I think we will, there might be a buy the rumour, sell the fact scenario. But I think further on, when you look at you know, why has this all become a real focus? I think it's become a real focus because it's become more of a geopolitical event, between OPEC, within OPEC's members, between the US and North American production, and of course Russia. Everyone's playing a game that the low price of oil is not going to harm them. So I think that if we do get a rally, I think people will still want to sell into it.
Jonathan, I will discuss that geopolitical issue in a moment, but isn't some rejig in supply warranted according to you? Reports indicating that the supply has been in excess all of 2014. So wouldn't you say some correction is being warranted, Jonathan?
Well, yeah, I would have liked to have seen that correction. In fact, the interesting scenario was that when we had all the bad weather in America, in the US, we would have expected some more support for the oil price. We saw heating oil go up, we saw natural gas go up, but we would have also suspected more support for the oil price. We didn't get that. So that indicates that the market's quite heavy. You also have to take into the equation the US continues to increase its production. And of course, over the last couple of months, we've seen an increase in its capacity by about 360,000 barrels. So if anything, the US is the one which is supplying more fever to the market.
David, in your opinion, do you think we're really making too much a deal out of this entire production cut, whether they will cut or will they not? Shouldn't market forces ideally be allowed to sort out demand and supply?
Well, ultimately, market forces do, I guess, eventually sort the market out in terms of the pricing, but it does take some action by both suppliers and perhaps a demand side to actually bring those changes about. And of course, at the moment, we are seeing significant supply side pressure, so that's keeping prices low. And I think, again, just commenting on the previous comments, we saw the EIA numbers pop out of the US overnight, and there was one little key number in there that we certainly took notice of. And for the week ended November 21, the US produced a record 9.1 million barrels of oil a day. So look, that certainly shows that the Americans, who collectively are a lot of little companies drilling away for oil, certainly aren't going to slow down from their side.
Sure. Jonathan, I want to step away from just talking about production targets and prices and talk about the larger question that really is begging at this point to be asked whether the OPEC even matters anymore. Is it even relevant any longer? If OPEC does decide to cut production, we understand the three members, Iran, Iraq and Libya, will be exempt from any such agreements, and that it will just make it so much harder for the OPEC to even stick together.
Well, I think that's a key focus as well. Because if the cartel can't control pricing, then what's the use of the cartel? But I think another dynamic is actually coming into the market, and that has to do with the ability to keep your clients. And if you do put production cuts in there, that'll only force the price higher for those clients that are buying your oil. So when you've got other players in the market, you have to look at what's actually going to happen if, in fact, they do that. When I question what's happened in OPEC, I actually feel that this could be a step in the ability for OPEC to have some very disgruntled members, and you might see some actually leave the cartel.
David, we are, of course, in a situation where you're seeing demand is slipping. We are entering into one of the coldest periods in the US, but OPEC and its production targets and cuts, if any, should it make such a difference?
Oh, look, yes, it will, because you've got to remember when you add the cartel-producing countries together, they do form quite a block of oil production. So if they can, in fact, action what their rhetoric would be, and that is cut production, we would see a movement in the oil price. And we've seen that many, many times. And of course, unfortunately, it's just the way that OPEC operate, and they've operated this way probably ever since the cartel was brought together. We see members pressure each other to try and change actual production rates. That from time to time works, and then other times it doesn't. Look, we're a little more positive. We do think that they will actually look at their real production and will probably start to just cut that back. We have seen a small fall from October through to November, and we think that may continue on through the rest of the year.
Jonathan, so you were talking about the geopolitical issues earlier. I want your comments on that. We've seen shale output in the US, for example. That has been increasing. You have the entire Russia factor, which is also, playing out. Is it more of politics, or is it also some bit of demand, because demand has been falling on one hand?
Well, obviously demand is a key component, but I think if we cast our minds back to the price wars in 1986 and what drove the price of oil down to about $10 a barrel, you can see that the politics that happened between Saudi Arabia and the US, and in a funny sense, it's getting close to that, where both of them are saying that they can handle lower prices. In that case, we saw such a dramatic fall. There is potential, I see, for that, particularly when you've got, those countries, particularly India, that need oil. They're quite happy. They're a free agent. They can go and shop around. And I think when you've got more producers, it certainly does create that geopolitical tension, between trading partners. And I think that's something on the landscape that we've got to get used to. And it might benefit, a lot of those consuming nations if, in fact, this ability to protect market share deteriorates and prices fall.
Jonathan, you're talking about geopolitical issues. We saw Nigeria yesterday devaluing its currency. What sort of impact on prices or sentiment, on the other hand, do you think it will have? It's just the sixth largest contributor as far as OPEC goes, but would you think it's more of a sentiment play?
Oh, look, this is the exact thing. This is sentiment within the OPEC members that isn't working. They tried to bring together to form the right announcement for the cartel, but Libya is changing or trying to do other means to stimulate its own economy. And when you look at most of its revenues from oil, they have to look at other measures if they want to remain part of the OPEC membership. So I think this discussion is going on. Other forms of stimulus are actually coming. Devaluing the currency is one, but obviously if prices of oil went up 10 to 15%, you see a similar effect. So I think the cartel members are questioning its worth, given that they've got struggling economies that they've got to try and placate.
All right, David, I want to bring you in for a quick last question. What do you think is going to be the impact of all of everything that we're picking up from OPEC, from what's happening in the global oil prices on India?
Oh, look, we certainly think, as earlier in the report, it was suggested that it would be quite a positive impact for India as the oil price falls. But look, we really think that in the short term that's the case, yes. But what happens in the longer terms is it does make countries more reliant on oil as an energy source, and we'd rather see the price be balanced where perhaps other energy sources can be sought out and used within an economy sufficiently and successfully as well. So there could be an end game here that you not only weed out perhaps competitors in the oil market, but you're also perhaps wanting to knock out other sources of energy. So look, in the short term, very positive, but perhaps in the long term, it may not be quite as positive as we think.